Welcome to the Liquidity Event, a show about all things personal finance with a laser focus on taxes, financial independence, and equity compensation. Hosted by AJ and Shane of Brooklyn FI, each episode will focus on a personal finance topic, some driven by news headlines and sometimes driven by listener questions. And sometimes you'll just get two money nerds rambling about what they think is interesting. Just a quick note before we get started, this podcast is for informational purposes only and should not be considered tax or investment advice.
Hello, and welcome to the Liquidity Event. I'm your host, Allie Jane Ayers.
And I'm Shane Mason.
And this is episode 149, being recorded on June 4th, airing on Friday, June 6th. A quick reminder for you listeners, we will answer your questions on the pod if you leave us a message. You can disguise your voice and use a fake name if you're shy. That link is memo.fm/the liquidity event. Today on the show, we've got rich people who rich right asking if their millions are enough. But before we get to some very interesting listener questions, we are going to talk about IPOs and why IPO prices are lower than previous fundraising rounds. What happens when your startup is worth less now than it was last year? How are you doing, my friend Shane?
I'm great. We're about to head into the summer. It is early June. Our whole team's on Summer Fridays. I hope our dear listeners are also experiencing some Summer Fridays and doing some travel. So you and I are, I think, doing some give and take episodes, right? Are we doing some reruns coming up pretty soon?
Oh, yeah.
We're heading into the summer sessions.
Yes, it's summer sessions here on the Liquidity Event. We will be taking a few weeks off, and instead of giving you nothing, dear listeners, we are going to give you some, not reruns, but an opportunity to listen to us being hosted on other podcasts. First up, we've got Shane on the world-famous Accounting High podcast with our bucket-hatted friend Scott, who is one of the funniest accountants I know. You're the funniest accountant I know, Shane. But Scott is pretty fun. So I enjoyed your conversation a lot. And then I am chatting the following week with Heidi, also a tax person. We've got a very tax-heavy June. You know, we've got the quarterly estimated tax payment deadline coming up in 11 days. So, you know, taxes are on the mind for all of us. So I hope you folks enjoy those episodes. Shane and I will be traipsing around Europe. Sorry, we can't be here.
I'm busy traipsing. What is it with traipsing? Or gallivanting? I think when you go, it's traipsing, and when I go, it's gallivanting, is what our employees say whenever we're out of the office.
It's one worse than the other?
Oh. I don't love people thinking that I'm gallivanting. What the hell does that mean?
Who says you're gallivanting?
Buddy, it's happened multiple times. It's the word gallivanting. What is, dear listener, write in what you think. Let's live on the pod.
Okay. What is the definition of gallivanting and what is the definition of traipsing?
Oh, gallivanting is to go from one place to another in the pursuit of pleasure. So yeah, okay, relax, everybody. I was taking piano lessons earlier today. So yes, I'm in the pursuit of pleasure. Is that not
the pursuit of pleasure?
Yeah, but the tone of gallivanting is like I'm in this
roll
around in the streets.
Can we get a live
Not
recital?
on this. It's literally my first 10 minutes of ever practicing a piano.
The only thing I can play on the piano is
the
the first couple chords of "In the End" by Linkin Park. You know, dun, 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 dun. That's all I can play on the piano.
Oh, that totally reminds me. Are you watching the rehearsal, Agent? With
I am not.
Nathan Fielder's The Rehearsal.
I have been told by many people that I would love it, but I think it's going to be too awkward for me. But I'll get to it at some point.
Well, I mean, one of the last episodes was one where Nathan confronts that he might be autistic. So yeah, it's perfect. Not perfect for you, but it's just awkward. To your point, there's a lot of awkwardness in there. But he creates a whole fake game, singing contest, and the winner sings Linkin Park.
Sick.
Yeah. So, there you go.
Speaking of traipsing, where are you currently traipsing?
Yeah, what does traipsing mean?
Tell us, OED.
You get to traipse, and
I think this is made up. This is like a made up.
To walk or move reluctantly. So you're cautious. I'm in pursuit of pleasure, rolling around the streets. I don't love it. I know you're actually up to. You're in pursuit of pure pleasure at all of the
100%.
You're in 4-star hotels and 3 Michelin star spots.
Please,
Meanwhile,
I would never stay in a 4-star hotel.
There's more stars than that?
Five, Doug.
Oh, there's five? See? Who's in pursuit of pleasure here? Cool. That's enough personal
Oh,
stuff.
right.
That's
Enough
what we're
personal
up to the
stuff.
next couple of
That's
weeks.
what we're up to. But we will. And then we've got John and Ed guest hosting
Right.
at the end of June, and then you and I will be back in July to celebrate the birth of our nation and the birth of yours truly. Okay, so what do we have here? We have a article from our friends at The Information, which is titled. Let me pull it up here. Every VC-backed IPO in the past 12 months has been a down round. Shane, what is a down round? Can you define that for us?
So whenever you sell shares of your company, whether it's 5% or 50%, we kind of reverse engineer. We reverse engineer the overall value of your company. If you sell 50% of your company for $5 million, then it's an implied that 100% of your company is worth $10 million, right? So throughout 2020, 2021, these VC-backed companies were going out to their VCs or to private equity or whoever's involved in the investment in the raise, and they were selling 5, 10, 15% of their companies. And we were reverse engineering the total value of the company. That's not how it actually works, right? There are some premiums and some discounts to whether or not you own a significant, if you can control a company, you should have to pay more for that because it's an additional right. There's dividend features, all types of different things that would actually change the exact amount and value of a company. But what they're talking about in this article is that a down round, what typically happens with these companies is their trajectory is up and to the right, and their valuations are typically up and to the right as well. So if you are growing your company, revenues are going up, profits might be going up. They're definitely probably not trending downwards unless you're making very large investments in infrastructure or people that are going to be necessary for you to experience that J curve that we're all familiar with or should be familiar with, in which the value of your company is scaling upwards. The more revenue you have, the more net income. You're just performing better as you get bigger. But with a down round, your value as a company has gone down when you do raise from those VCs, which is just not very typical. It's not great for morale at these companies because one thing that is really important in life and in careers, but also for companies, is the trajectory that you are on. If there is unlimited future for you, if there's unlimited upside and everything is trending in the right direction, it has a lot to do with your morale. It has a large impact on your morale from a psychological state of view. And what the information is really harping on here is that for whatever reason, or for a few reasons, companies are now raising money at lower valuations that they had in the past. And that hurts morale because it locks in that valuation. You might feel that your company might be worth less because, post-pandemic, you haven't raised any money yet, or your revenue might not be growing as expected. But with private companies, you don't really know the true valuation until you lock in a round. So they're really locking in these lower valuations, which means you're now trending downwards as opposed to upwards. And one of the main reasons could just be that you are not performing as well, or it might be because you just raised at such a super high valuation prior to
right. I mean, that's the issue
turning
here.
the corner.
Right. It's like money was cheap during COVID, right? We took interest rates down to practically zero, and and everyone had a fuck ton of money during COVID. So if you're a VC, you're like, hey, I've got all these investors coming in, all this capital I've got to commit. Like, sure, Chime, you want a $25 billion valuation? Awesome. Can I have 5% of that? No problem. So we had this inflated capital that started with interest rates being at historic lows. And now all these companies are looking around going like, I don't want to go public. I can't tell my investors we're worth half of what we were 3 years ago. But Chime is the first example, and they're kind of saying, look, we're going to do it anyway. And Reddit did it last year, right? Reddit's IPO price was actually lower. Their valuation at IPO was lower than a previous round that they had raised. And now they're up, 200 and something, stock price is up 200 and something % since that IPO a couple years ago. So we do have a little bit of precedent to say, yes, I know we are going public at a lower share price, and that sucks for employees. But based on the public markets, hopefully we can get everyone their money back once the lockup is over. And the public is now the folks who are instilling confidence into these companies and wanting to make that investment in them. I hate this. I feel like we've seen this most starkly. It wasn't necessarily a down round, but it was just focused on the stock price of the company at Spotify, right? We had employees getting hired at Spotify in September of 2022 when the share price was 150 bucks. And we had folks who had options that were expiring and they were getting new shares granted and they were basically having to sell shares underwater. And they were faced with this like horrible decision of like, hey, my shares are expiring. Should I just let these go? Because I'm actually going to pay a premium for this. And we actually did make that recommendation in a few cases. We just ran out of time. So that's the tricky part with all this equity is you can do everything right. You can work for these companies, but if you time it wrong, if you just get hired at the wrong time or your equity gets granted at the wrong time, you might end up a lot worse off than your colleague who started 6 months before you or 6 months after you. And that's what we're seeing right now.
Yeah, I mean, you're buying high and selling low. If you're one of these late
don't do
stage
that.
VCs that got in,
Yeah.
I mean, just to like circle, like just to talk about how big of an impact, there's a inverse correlation between interest rates and valuations of companies. So there's a really great chart in a different article from The Information that really shows this correlation between IPOs and the interest rate. I just want to circle back and like double click on what you said earlier around the interest rates and really the cost of capital. If you can buy or if you can get capital at a 0% interest rate, it's almost essentially free for you to go pump that money into a growing company. And if you have enough people doing that, VCs, private equity, individual retail investors, then it's just actually going to put a pressure on the valuations of these companies upwards. And with interest rates are where they are right now, and with what the administration is doing right now, not only increasing the cost of capital and like also causing shakiness in the bond market with all these tariffs and getting downgraded by Moody's and S&P, et cetera, all that's doing is increasing the cost to borrow and pushing down these prices. One of the interesting things I'm seeing here, AJ, is that we do have IPOs happening, even though they are in quote down rounds. And it's not the end of the world. Like it's not a terrible thing. Like at the end of the day, you still need to create liquidity. Like these companies need to go public at some point. The VCs, as we talked about a lot on the last episode, as these portfolio pruners exist to go out there and do M&A just to sell these companies because no one's going public. And these endowments need to get cash out of these VC portfolios. So we don't have an unlimited time horizon. Like we have to turn these companies around and get them liquid. So even though Chime's last private round or Circle's last private round, the crypto company that has a tether coin or a coin tethered to the dollar, its last private round was at $42 in May of 2022. No round for 3 years, but an IPO 38% down from that. This is assuming a price, and we don't know what it'll actually list at because it's listing this month, but it's down 38% from the last private round.
Yeah.
No, I'm talking about the Circle right now.
Circle. Gotcha.
Yeah. Yeah, so we don't know exactly when this article is posted. There's a graph here. It doesn't have the exact date of the Chime IPO. It just says that it's upcoming, but I'm looking at Circle's IPO listing for June of 2025.
Oh, gotcha. So that listed last week or it's upcoming? Oh, cool. All right. I missed that. My bad. I was focused on Chime.
We talked about.
Cool.
Yeah, no, I just transitioned. It's unfortunate that there's Circle and Chime and they're next to each other on this chart. So yeah. So
because we
actually really like Circle it's the first crypto company that I'm really bullish. Like I really enjoy that it exists because of its business model. I think I've talked about it before in the podcast, like the difficulty of moving money between international banks is a big problem for me. And hopefully this can help out with that, especially as the world globalizes and it gets easier to move about the cabin, so to speak. Be cool to see this company be successful.
Yeah. I have a friend who is doing some work on their house in Mexico. And in order to get the contractor moving, this is not you, by the way, this is a different friend who's having work done.
You can just say that it's me.
It's not you. It's actually somebody else. It's actually a different person in a different city from you. And they last weekend had to fly down to Mexico to get cash out of the bank to be able to pay their contractor because that was the only way that the work was going to get started. Because of the weird way that wires worked and the bank accounts didn't match up. They tried everything. I believe them. This is a very smart person. So yeah, any way that we can move money between borders that makes it easier.
Anytime it comes up again, let me know before they fly.
I will. Every option was explored. I promise. But so we did actually get a share price for Chime on Monday of this week. So they're pricing it at 24 to 26 bucks a share, with a market cap of 11.2 billion, which is down from their $25 million valuation in 2021. So 4 years later, and we have a valuation cut of almost cut in half. That sucks.
Yeah, I mean, it's almost semantic. Like I was complaining earlier about the trajectory of a company. I think if you understand how economics works, like people like you and not to like infantilize other like listeners or these people that work at these companies, but if you understand what's going on and from a macro scale, like you can't do anything. All right, we raised a really high valuation before. That was a good.
We're adjusting. Yep.
Yeah, but you can't always explain macroeconomics, all the people that work at these companies, right? It's just like, oh, my stock's worth less. And I don't understand why.
Which is a good reason why we typically encourage our clients to participate in tender offers, because tender offers can often be that opportunity for you as an employee, as a shareholder, to capitalize on those up rounds. Or we don't know they're up. We hope they're only up rounds. But with hindsight, it might end up being like, oh, that was the only chance for me in the history of this company to get that increased share price. So if you are able to sell 15 or 20% of your holdings, that's typically a good idea. We hope your company goes public. We hope there's an IPO. But as we're seeing right now, that pipeline, and we talked about last week, that pipeline is blocked by a giant hairball of a bunch of Freddy Cat investment bankers and CEOs and CFOs. So once we clear that out, then we can start to get a liquidity out in ways other than tender offers.
I still don't know what the cat is. What is the cat in this metaphor?
There's no cat.
How is a hairball? How is there no animal with a hairball?
You date women? Have you ever looked in your shower drain?
Oh, you're saying a hairball in a human?
Yeah, no, in the drain pipes, in the plumbing.
This is a plumbing.
Plumbing.
Okay.
Yes.
All right.
Yes.
Normally hairballs.
No, it's a giant ball of hair.
Your hair is falling. Oh,
my hair is going in the drain. My sink is backed up. My tub is backed up. Why is it backed up? Call the plumber. And the plumber removes this giant, disgusting, matted ball of hair.
Okay. All right.
I've had long hair my whole life.
Yeah, I got you. When I hear hairball, I think of like Garfield. So,
not cat related.
I also have long hair, so I don't have this problem. What's going on?
I had a zingy response for you, but I'm going to withhold. Okay, anyway.
Oh, no.
So you haven't stayed in... No, I'm not going to say it. It was too mean. I'm going to meet... No, that you haven't stayed in one place too long enough to know about the plumbing. Anyway, moving on. Fair.
Cool. Let's keep it moving.
All right, let's keep moving. Let's talk about... let's take some listener questions or some Reddit questions. Is $10 million enough to retire on? This is a long one, but I'm going to read it because I think the details are important. So you ready? What does $10 million... You're here? You just roll call? Okay, great. What does a $10 million post-tax exit practically buy me compared to $5 million? And what about $7 million? I think this person is a 32-year-old male. Basically, I'm 32 and somewhat burnt out. I've been lucky enough to work in tech at a strong company for a few years and have a roughly $5 million post-tax liquidity opportunity on the horizon. I currently make $410,000 in salary, and my partner, also my age, makes around $220 base. I have lots of job opportunities due to my experience, so I shouldn't have trouble finding a job to pay me about $300,000 if needed. I'm currently vesting something on the order of $400,000 a month in equity with occasional... Wait, did I read that right? They're vesting $400,000 a month in equity. Wow. Love this. I love this. That's amazing. Okay, cool. Anyway, don't quit. Moving on. I've only currently vested 50% of my overall stock grant, so I have $5 million vested, but would vest another $2.5 million a year for the next 2 years if I keep working. Some part of me wants to take that $5 million, buy a house for $2 million, put the rest in the market, and take a year or two off, and maybe come back to work in a few years when I only need to make enough money to cushion expenses while I let the principal grow and enjoy the paid-off house. But I also want to know that I can work one more year, and walk away with more like $8 million, or work 2 more years and walk away with $10 million. So my question is, looking forward through my life, living in a high cost of living area, going to have probably 2 kids starting in my late 30s, what does the extra few million actually buy me practically? I don't really have expensive hobbies, blah, blah, blah. They road cycle like everybody else. I don't have a desire to drive a fancy car. I don't need a crazy nice house. Sounds like 2 million will get you something nice in your high cost of living area. I like traveling, but I've learned that luxury travel feels hollow. We're going to have kids, but we'll likely put them in public schools. Okay, so basically they're saying I like a nice life, but I don't need a ton of stuff. I've got 5 million already, right? No. So that's what I'm not clear on.
They already have 5 million.
Do they?
It's already vested. Yeah.
Okay.
That's why the 400K every month is
Right.
24 months at 400K. It's another 5 million.
All right.
Assuming the stock price stays flat.
Yeah. Okay. Uh, is there some set of activities that rich people do that are really, really worth being rich for that I'm not appreciating? Ooh, I like that question. Is there much more to life than cooking, learning, staying fit, and enjoying time with my family and friends? How much am I likely to regret not having the extra 5 million when I'm in my 40s or 50s? Love this question. Initial thoughts.
Yeah, and just to be clear, they're assuming they would have 5 million after tax because the 24 months of 400K is
Yeah.
10 million, but half of that goes to taxes. So, yeah, my initial thoughts are that you never know what's coming down the pipeline, and you can always use more money, frankly, whether or not you want to spend it on yourself or give it away. And very few people in the history of time, in the history of the world, have ever been able to make $500,000 in a month. So it's really hard to tell this person to not work when you're making $500,000 a month. I mean, that is 160 hours per month of work if you're working 40 hours a week. So $500,000 divided by 160, you're making $3,000 an hour at bulk. You're not even a full, like you could probably like rest invest. Like, and that, by the way, that was something I was going to mention is like, do you really need to work that hard? Like
Yeah,
if you're
just take.
burnt
I mean,
out,
we've had clients ask for pay cuts and demotions. Like, you just need to work there. You just need the equity to vest. Like, can you give someone else, promote someone on your team, and take a back seat, take a leadership role where you don't actually have to do work. You just have to manage people, which can actually be harder than doing work in some cases.
yeah,
So you say stay.
yeah, 100%. I mean, you're going to make $5 million after
Interesting.
tax for 2 years of work at 32 years old. If this person was 52, definitely 62 or 72, then you have to start to wonder if they're ever going to need that money, right? Like if they could spend it down within their timeline. That's the really fun thing about the Reddit questions is I know this one was really long that you read, but oftentimes they're just like 4 sentences and then there's not enough information to truly answer the question. And there's still not enough meat on this bone to like understand what their desires are. Like, where do they
Yeah.
want to send their kids to college? Like high cost of living relative to like, what are you in New York, San Francisco? Are you in London? I don't know, like healthcare sounds like they're in the States, but you just never know. I know we can't do a full financial plan for every Reddit question, but my answer is to keep working because you never know what life's going to throw at you. You never know if there is going to be 30 years from now, or I don't know, 10 years from now, there is a cure for the specific cancer that you have, but it costs $4 million, right? Like, who knows what's coming down the pipeline? We're in peak ambiguity when it comes to technological change. And with technological change comes the ability to spend money on things that can improve and change your life. And unfortunately, in the United States, it's really hard to get access to those things unless you are exceptionally wealthy. So I just think that, and even if you don't want to spend the money on yourself, if you're happy to die, as somebody that's planning on having kids or has the mindset wherein they can move the needle in a direction that the company probably won't do if they keep all of that income to themselves, they can probably have a big impact on something that's really important to them. You know, $5 million could be donated to a DAF and you can figure it out later what you want to do with it. But I think that's, yeah, I'm going to land on the side of working. And I'm curious if you have an alternative, what your thoughts are on that.
I'm on the other side of the fence here.
Cool.
Mostly by this sentence here. I'm gonna have kids in a few years, and it feels like the last chance for me to travel and deeply experience life before my life gets locked down quite a bit. This person's 32, right? So they're young, they're probably fit, they're healthy. They say they enjoy cycling. They've said they're burnt out, right? They're burnt out. They have a partner. Their life doesn't sound that great right now, despite the fact that they're making $500,000 a month. They're basically guaranteed, it looks like, to have 5 million no matter what. Like if they just like walked away right now or worked for another year. So they buy the house. They have housing security for life, right? You could always take equity out of it. You could always sell it. So that's $2 million. But they're also like, I don't want to put everything in real estate, so I'm going to diversify. I'm going to put $3 million in the market. Market returns on average, depending on who's arguing at what time horizon, let's say between 8 and 15% annually. So that's a nice chunk of change to live off of. This person realizes they can't live off that forever, so they're going to need to supplement their portfolio earnings with a job. They're only 32. You and I both know that if you've worked really hard and you're proud of what you do, just retiring and never making income again is highly unlikely. There's two of them. The partner also has the ability to make six figures. So at any point in their lives, someone is probably going to be employed. Someone's probably going to have health insurance to cover those benefits. I mean, this person has the emotional maturity of Gandalf the Wise here, because they're saying, you know, what is it? Like, I like my life. I've figured out my hobbies. I have a partner. What's beyond this? Like, what am I missing out on? Shane, I agree. Yeah, the opportunity to be really, really rich opens up other doors, but it also opens up a lot of negativity. You know, who are your friends when you're worth 16 times what your friends are worth? You know, how is your life going to change? Are you going to have lifestyle inflation? This person seems afraid of lifestyle inflation. It seems like they have a pretty good life, and I don't know if burning the next 3 to 4 years of their prime, you know, they're enjoying life, they want to see the world before the kids show up. I don't know. I'm team quit. That's what I would do.
Okay, right on. Okay, we'll see what happens when they want to fly that 1 and 2-year-old around and they have to sit and coach because they don't have the money, as opposed to sitting in Delta One where they could just have it, an immaculate experience and continue to travel.
Yeah, but they're making 600K though. Like this person's like, that's the thing. They're not quitting and losing the income forever. They've got a portfolio of 3 million.
If
with
they
no
quit,
housing costs.
If there's anything that we know from what it looks like if you take a couple years off of work to have kids, for example, you are permanently handicapping your ability to make this kind of money. So they're not leaving the workforce and coming back 2-3 years later in a super highly competitive industry and making $400,000 a month. What? This is nuts, man. That's crazy. Imagine explaining that to your kids who are like, maybe there's not money to go to Harvard because dad didn't want to work a couple more months or mom didn't want to work a couple more months. Like, it's hard for me to justify.
Yeah. Yeah. Interesting. I don't know.
I see it both ways.
The value of being happy with what you have is much more valuable than wanting $5 million, as we've seen over and over again. Like the value of.
Well, to your point, their personality is in the right place, but you don't know where their personality will be 5-10 years from now as well. Right. Like, I think we overestimate our ability to think we're going to be the same, or not our ability, but I think we don't know who we're going to be in 5-10 years. I mean, this guy he's into learning, enjoying time with friends and family. Like, what else is there to life? You probably will find out. And it might involve being really into classic violins or some shit. I don't know. It's nice to
collecting Stradivarius violins.
Who knows?
I mean, I think based on the really, really, really rich people that I listen to and read their books that they've written, to me, the thing that, I mean, this person asked practically, what are the things that I'm missing out on, right? He's like, I'm good. What are the things? I mean, what do we hear constantly? Flying private, right? Like having the ability to just hop on a plane and have super fast Wi-Fi and show up in Paris the next day and be like, well, I might want to go back to New York a different day. And I might want to stop by, London on the way. So I think flying private is probably one of those things that dramatically changes your ability to see the world. And, I think upkeep of a private jet's about $2 million a year. So I don't even know if they would be in that stratosphere if they kept working, but that's potentially one of the game changers.
Yeah, one of the game. I mean, also they're about to have 60 more hours per week in both of their weeks. That's 52 times, all week. Like that is every day is the weekend. Like that shit is expensive.
But that's the thing. They're not stopping work though. That's like, they like working. Like they're not just like quitting and leaving forever. They're pulling back. But agree to disagree. I'm out. I quit. I'm not
cool.
Here. Anything else you want to say? Yeah, I like that. This is
no, that's a fun one. Yeah, I think they're in a really good position. I'm really proud of the Reddit community.
Yeah, I mean, such emotional maturity and wise. This person's gonna be fine. That's why I was like, you're good. Like, this is like. Do you ever listen to that podcast, If Books Could Kill?
No.
It's
Never have.
hilarious.
Wow.
I think you would like it. They like rip apart kind of like popular bestsellers like Freakonomics, The Secret, Women Are from Mars, Men Are from Venus, and the one on The Secret. Are you familiar with The Secret? It's basically
No.
like it's like manifest, like think good thoughts, and love and money will find you. It's The Secret.
For
It's
sure.
like vibes, but I don't know. This guy's got this got vibes. Like the vibes are here. Like if he quits now, I think the 400 a month will come back to him in vibes if he reads The Secret.
Okay, thanks for that. That's appropriate. And on my side, the last thing I'll say is that $5 million is from Succession, not enough money. You can retire, but you'll always have to worry about money. That's what they say. You'll be the tallest midget in the room. You still have to work, but you can't fully retire. $5 million is that's the worst amount of money.
The
to
worst
have,
amount of money.
according to,
All right, so we need another 5.
because Succession
according to
characters.
Roman Roy.
Yeah.
Perfect.
No, it was
All right.
Tom and the rich brother that runs for president. I forget his name, but great character.
The Greg? No, that's the cousin Greg.
Cousin Greg
Okay.
is receiving the $5 million.
Right.
from
And
his
it's like
uncle.
that's the worst.
Yeah.
Right. I remember that scene. Yeah. He's like, yeah, that's not enough. All right, cool. Thanks for listening. Email us your financial problems at liquidityevent@brooklynified.com. Leave us a voicemail at memo.fm/liquidityevent. We'll play it on the air. And finally, Stans can leave us a review if they want to be weird about it. We'll see you in a few weeks. Bye.